Where to invest during times of economic uncertainties? A great place to start is with companies that pay a dividend, but more specifically, a company that pays dividends consecutively and increases those dividends over the years, if not decades. Today, we are talking about Dividend Aristocrats and Dividend Kings. If you don't know what that is, we'll be discussing what kind of companies fall under these categories. We'll be looking at some ways to play this on the Toronto Stock Exchange, and we'll finish it off with a key metric to look out for, especially if you like investing in this area. But if this is your first time here, my name's Nick and welcome to Ways to Wealth. Before we hop into the video, a huge favor, a huge ask. If you learn something new or you get some value out of the video, hit that like button for me. I definitely appreciate that. And we drop a video every single Sunday, so make sure to come back to the channel and check it out. We're gonna start first with Dividend Aristocrats, but we're gonna change it a little bit to pertain to the Canadian market. A Dividend Aristocrat is a part of the TSX and has increased its dividend over the past 25 years without fail, through thick and thin, through times of uncertainty. In the past, these companies have continued to provide a share of wealth to their investors. Additionally, we have a Dividend King. Now, what is a Dividend King? It is one that has increased its dividend over the last 50 years. 50 years, think about how much economic uncertainty there's been in that time, but they have consistently provided to their shareholders. And that's perfect example as to what we're talking about today. Times of uncertainty, low risk to the portfolio, but still ensuring that these companies will continue to increase the dividend, the money that is going into your pocket. Let's take a look at some of the companies that fall into these categories. And we can see here, there is a long list of companies that have consecutive dividend growth, but we're going to be specifically focusing on the Aristocrats and, more importantly, the Dividend King. And the Dividend King of Canada is Canadian Utilities, cu.to. We'll be discussing this one in a little bit, but it is the only one that falls in the Dividend King category of 50 years of consecutive dividend growth. We have some other players of Fortis, Canadian Western Bank. There's a few other players that are in the mix here. If you want to check out the list, I'll throw it down in the description and go check it out. For my ETF investors, one way that you can get exposure into your portfolio is through the ETF CDZ.to. It's an iShares product, and we can see here it trades for around $31 on the Toronto Stock Exchange. And then we also have a year-to-date return of almost about 6% if we round up. And let's take a look at some of the key facts. So, diversified exposure to a portfolio of high-quality dividend-paying companies. We also have an underlying index screen for large, established Canadian companies that increase ordinary cash dividends every year for at least 5 consecutive years. So although this is not the definition of what a true Dividend Aristocrat is, it is something to take into consideration, and it strives to pay out a monthly dividend for you. Currently, this ETF is paying about 4% dividend yield, which is definitely in line with the market. But more specifically, let's take a look at the holdings just to see and give us an idea of some of the companies that are held in this ETF, which you can take a look back at the previous list that we just covered to see some of the names that are in there. We have names like Fiera, Aecon, Bank of Nova Scotia, Financials, Energies, companies that will consistently perform decently during times of uncertainties. So take a look at this one. Make sure you do your own due diligence, but we'll quickly jump over here to Yahoo Finance just to compare how these have performed. So what we have here is a comparison of a few different names, ones that we have covered before, but we have CDZ in the blue line, VDY, we have XDV and XIU. And if you're not familiar with XIU, it's the top 60 companies in the Toronto Stock Exchange. And right off the bat, we see a similar performance, if not a little bit of an overperformance from the TSX 60. Please note that this does not take into account the dividend income. So I'm sure that the dividend would be higher on this name than it would be on XIU. But we can see here XDV is definitely the underperformer in this mix, but basically they all perform relatively the same. Now moving on to the Canadian Dividend King, Canadian Utilities. It says it in the name, a utility company. These types of companies can push the inflation cost off to their consumer, meaning that they can maintain their margins, increase their revenue, and cover anything for inflation. And what we'll take a look at now is their presentation, and we can see that they have increased that dividend for 50 years and they are proud of it. The only dividend king on the Toronto Stock Exchange. And just take a look at how they've been able to increase that income distribution for their customers, for their clients, for their shareholders. And another thing that I would stress, something that we have to be aware of, is understanding what the payout ratio is. So quickly learning a little bit about the payout ratio, we can see here whether a company's current yield can be maintained or increased over time. Lower payout ratios are preferred, higher payout ratios are bad. A higher payout ratio indicates that a company is sharing more of its earnings with shareholders and retaining less cash in the business, which may impact future growth. If they are paying out all of their income, all of their revenue, all of their profits in a dividend, they're not able to use that cash to grow in the future. Whereas with a lower payout ratio, they can use that money to grow. Free cash flow invested into new things. A high payout ratio is definitely something to be concerned of, and it might give an indication that this dividend may be on the slowdown, or they may have to hold off on its increases in the future. To get an indication of what Canadian Utilities payout ratio is, and we can see over the past couple years it's actually been greater than 100%, and that brings into question if they are using debt, if they are using loans from the bank to basically increase that dividend, to give it the allure. There's definitely more research that needs to be done here because I'm not entirely sure why, but it's a red flag. It's something to be cautious of. Although they have got it down in the trailing 12 months, over the past couple years, it has definitely brought into concern that it's greater than 100. Anything between 50 to 70% is all right. Lower payout ratio is not bad. Anything greater than that definitely brings into question what is going on under the hood. So with that being said, we've covered Dividend Aristocrats, we covered Dividend Kings. These are companies that have consistently increased the dividend during 0809, during the 2000 bubble. These companies are definitely prepared to continue to push forward. So let me know your thoughts down below. What's your favorite one out of the ones that we covered today, or do you prefer to have it in ETF form? If you're still here with me, make sure to hit that subscribe button, and I hope you all have a great week in the markets. Happy trading.